Well, the Fed met this week, and my sons and I just got back from an awesome little adventure. I love my job. I love helping people. And I love that it lets me work remotely so I can take my sons on adventures and still help you. So this week the Fed met and they cut interest rates as anticipated, a quarter of a point. Again, when they cut interest rates, it's the short term lending. It's the overnight lending rate. So your credit cards, home equity lines of credit, those kind of things drop, not mortgage rates. It doesn't have a direct correlation. The last two times the Fed's met, they've cut interest rates a quarter of a point, and rates have gone up. So what happened this week, though? Rates started about here. They went up in anticipation of the meeting. They actually went down through the meeting and then Thursday, Friday, came back up, and we had a lot of action to start the week, or finish the week, where we started the week. So that's good. What the biggest catalyst to this was that the Fed announced that they were going to be buying some bonds, and in the last couple of years the Fed hasn't. They've rolled off over $2 trillion in bonds from the balance sheet, so it's like kind of like quantitative easing light, where they're back in the bond buying market, which was positive. At least had a positive reaction from the bond market. So good news. The government decided not to release the jobs report, so we're not going to get that until sometime in January. Fed doesn't have a lot of data to work with, although they do work off the numbers from Indeed. So they at least have an idea. Anyway, it was a big week. I'm always here for you, and I hope you have an amazing and awesome weekend. Peace out.